Niels, looking forward to 2024?
Yes, 2024 will be of even more change, and change can mean investment opportunities.
I think that 2024 will continue to challenge the assumptions we made over the last decade.
One of the most striking features of the last decade was the decline in the cost of risk. After the global financial crisis, central banks cut interest rates very materially for a 10-year period, and markets responded to that. They went up.
Hi. We are really at the beginning of a new era in many ways. We have many big trends coming together.
It's the themes we've been talking about for a while.
Decarbonisation,
Deglobalization.
And demographics. And the challenge with these structural trends is they all point to deterioration in the trade-off between growth and inflation, which means no easy choices for the central banks and potentially more volatile markets.
What's the one event that could affect next year?
The US election.
depending on the outcome, the result could be a revamp or a complete reversal of the policies that we've seen in the last 10 years.
Well, the thing we'll really be watching from a market standpoint is the likely path of fiscal policy for years to come, because we already have very high debt levels in the United States.
If Trump is re-elected, it will mean radical change. He's even proposing a 10% tariff on all imports to the United States. If that happens, there'll be an enormous change and a very serious challenge to corporates operating globally and to investors.
What will not change, irrespective of the result, will be the protectionist stance of the United States, I think, because both sides agree on this point. And ultimately, the US is in a race for technological supremacy against China.
Is protectionism all bad?
There will be pockets that benefit. Clearly the reshoring trend is beneficial to domestic labour markets in the West, which leads to some interesting opportunities. But there are also some countries which are sort of straddling those geopolitical divides quite well, like India, for example.
We see private equity in India as a big opportunity. So India is the fastest growing large economy. Also, it has a young and growing working population. India is benefiting from deglobalization as companies are diversifying their supply chains and implementing China Plus One strategies. And India is also a place to drive decarbonization.
If we're going to meet the challenge of decarbonisation, the only solution is technology. We're going to have to deploy a lot more wind, a lot more solar, a lot more carbon capture, all those technologies if we're going to get anywhere near net zero.
That will create opportunities in infrastructure equity and infrastructure debt around the world, mainly in wind and solar, but also in some other areas like hydrogen.
How much of a problem is demographics?
We've reached the tipping point in terms of the working age population globally, which is putting upward pressure on wages. But it also does create opportunities in terms of providing the services for the grey boomers, as they're now going to be called.
Real estate is really driven by demographics. As the populations are aging, there's a strong need for purpose-built housing and for care homes.
What do you think is going to happen with inflation?
We think that the trade-off between growth and inflation has deteriorated, that generally inflation will be higher because of deglobalization, demographics and decarbonisation. But ultimately we need to get used to new ranges for both rates and for bonds as a consequence, as a result of this sort of more structural shift in the inflation regime.
What's changed for bonds and cash?
Well, we used to use bonds as a form of diversification. In the last decade, we're in a deflationary environment, so bonds were highly diversifying in a portfolio context, and to some extent, we're willing to own them at pretty much any price for that reason. Now we've gone back to the old-fashioned reason for owning bonds is to generate income in the portfolio. And the good news is that yields are looking much healthier in fixed income.
What does that mean for equities? Do they become less important?
Oh, no, equities are hugely important because over the medium term, given that we do think inflation will be a bit more persistent, really equities are one of the best asset classes for outrunning inflation.
So provided you can focus on high-quality companies with strong balance sheets and little debt, you're going to be in a good place in equities going forward. We still like the US. It's an incredible market and it will remain a great place for investors to be. But right now, with the US having done so well for so long, it's probably time for investors to look outside the US and specifically at unloved areas, China, Japan and the UK. It's not about value for value's sake. Just because something is cheap doesn't mean it's good value.
Welcome to the third floor.
Thank you.
What's your opinion on commodities?
In the last decade, we didn't like them because we're in a deflationary environment. But now we're in an environment where there's more geopolitical tension, more competition between countries, a lot of distortion to investment patterns. So we actually like commodities strategically.
Well, when speaking about commodities and oil and gas, it's important also to think about renewables. Renewables are a very attractive investments, such as wind and solar. They are inflation-linked. It's secure income, and also they provide energy security in the context of the situation in Ukraine and Middle East. Yeah, we can't really speak about 2024 without speaking about artificial intelligence.
Tech and AI are going to be key to resolving these issues, boosting efficiency, reshoring, aiding with healthcare, and ultimately controlling inflation.
AI is reshaping markets and driving the next industrial revolution, which has already started.
And are the Super 7 still relevant?
Super 7, that's the largest technology companies in the US, have done really well. And some pullback is likely. There's also a risk of regulation. But this is not just about 2024. The outlook for the sector and for those companies remains excellent in the long term.
Where do you see opportunities in 2024?
Well, I think it's time to be a bit contrarian. Bonds have struggled over the last couple of years, and with central bank rates peaking, I think there are opportunities in fixed income for 2024. And then also, if we think about equities, clearly the Super 7 have done really well. But when you think about the broader market, it has actually languished in recent months, and I think there are opportunities, especially outside the US.